we're still at the Cape Town International Convention Center at the Reserve Bank's Biennial Conference, where there is a gathering of central bankers and economists from around the world talking about the challenges that global economies are facing in terms of the high inflation and the challenges that are posed by high interest rates that we've seen. Well, in earlier sessions, we heard that the hike in interest rates that we've seen have been effective in taming inflation. But to talk to us more about this, we have here joining us the Governor of the Reserve Bank of South Africa, Mr. Lesetja Kganyago. Thank you so much, sir, for joining us. With that, the theme for your conference is post-crisis lessons and policy changes. What would you say are the main challenges that the Reserve Bank is facing at the moment?
The big challenge that we face is the challenge that almost all central banks around the world, except for a few in Asia, are facing. And that challenge is inflation. And inflation shot up during the course of last year. But for many emerging market economies, we saw inflation rise from 2021, and many emerging market countries took a decision to adjust their policy rates from 2021 to be able to deal with inflation. And for many of the emerging markets, inflation peaked during the course of last year and declined. And in South Africa has been no exception. Inflation peaked at 7.8% in July last year. It has been declining gradually. But over the past 2 months, we saw an acceleration in the decline of inflation. And so we had two good readings of inflation. We had inflation at 5.4, and then the most recent reading is 4.7. But it is also masking something. When we looked at that, we were worried that the overall inflation pressures might be more broad-based. The welcoming news is that even if we adjust inflation for food prices and for fuel and electricity, inflation is still at 4.7, which means that it has declined. But there is a component which we call core goods inflation, which is, again, we strip all of those other things, plus we remove services from the inflation basket. Those are still elevated at around 6%. Overall, the inflation picture is an encouraging one. It seems to suggest that the policy measures that were taken since 2021 are having an effect. Still, the job is not yet done.
So with that said, does that mean that South Africans could hear news of an interest rate cut anytime soon?
I thought that you were in the deliberations in that room. What you have heard in this room is what we also heard in Jackson Hole last week, where there was another big gathering of central bank governors and academic economists. And it is that the job on the inflation front is not done, and that interest rates in the advanced economies are going to remain high for longer. And with that, it means that global financing conditions are going to remain tight, which has got implications, because for a country like South Africa, we need the capital flows. And if global financial conditions are tight, that could mean that we might be struggling to attract the flows. That has got implications for the exchange rate of the rand, and that is a risk to the inflation outlook. What is in no doubt is that there will be relief down the line once we are convinced that the job on the inflation front is actually done. Put simply, the lower inflation goes, the lower we will have interest rates sometime in the future. At the moment, inflation is not low enough. The job is not yet done.
I'd also like to hear your views on the effects of the load shedding and the logistics constraints that we're seeing on the economy on inflation. What does the picture look like there?
The picture is much clearer on the economic activity front than it is on the inflation front. And let me explain it this way and say that the economic activity was slowed down significantly as a result of load shedding and the logistics. We think that last year the economy could have grown 2% faster if it was not for load shedding, and so that has got implications. The logistics at an even more complex thing, because it also feed through into the inflation outlook. How so? It is cheaper to move goods through rail rather than through trucking, and to the extent that we end up moving more goods on trucks than on rail, we are having higher costs of distribution, and those higher costs of distribution feed themselves into inflation. Exactly how much, it is a judgment call still out there. Earlier in the year, we had estimates of about 0.3% of additional inflation as a result of this, but it is much clearer the impact on economic activity than it is on inflation.
So there are reports of a new strain of COVID doing the rounds in parts of the United States, India and Europe. Is COVID still a factor, a risk in terms of your forecast? People liked talking about a post-COVID era, and if you go back and check what we had been saying as the South African Reserve Bank, we had said that the world must learn to live with COVID. I think the World Health Organization had declared that COVID is no longer a pandemic, and that there would be strains. It looks like we would have to manage this thing the same way as we manage seasonal flu, that there would be new strains and so forth. The impact of COVID in 2020 and through to 2021 was what we would call a shock on the economy. The response was lockdowns and so forth. The result was that you had supply chains that were disrupted, and with the supply chains disrupted, when the economy reopened, inflation started to shoot up. What we have seen now is that new strains of COVID emerge, but what is clear is that it can now be better managed. It's no longer that big shock that we had seen. But with viruses, you never know. Thank you very much, Governor, for taking the time to speak to us. Well, that is the Governor of the South African Reserve Bank, Mr. Lesetja Kganyago, talking to us there from the Cape Town International Convention Center, where the Reserve Bank is hosting its biennial conference. With that, it's back to you in studio.